Let's bring in Oracle shareholder Nancy Tengler, CEO and CIO of Laffer Tengler Investments. And Nancy, you also own NVIDIA, Alphabet. You added, I think, to your Microsoft position recently and a few others in the space. What will you be listening for on the Oracle call?
Well, thanks for having me, Liz. I tell you, the conflicting rhetoric in the markets and in the Middle East are a lot to navigate. But we'll be paying attention to really three things. I mean, this is a company that has always utilized debt and actually had a much higher debt to equity ratio a year ago. But that said, the market is not a big fan of this, and so we're going to be listening for Oracle Cloud revenue growth. Is it falling to the bottom line? And will the company continue to defend its BBB rating, which is barely investment grade? I think that is really what investors are going to pay attention to as we look ahead. And then, of course, what happened with the openai Abilene expansion plans? I think that's also, it could actually be good news if Oracle's going to spend less. I mean, they do have a CapEx spend expectation of about $60 billion, and then sales in that space, in the cloud infrastructure, estimated to be up 79%. So the backlog's still there, but how is all of this going to come together? I think that's what investors are going to be listening for.
Who is sort of, at risk here? There's so many related companies. And that word related is almost like related party transactions, which is that circular part of this where you have a daisy chain that becomes an interwoven web of deals where, for example, one chip company might say to Oracle, make sure to use our chips and we'll invest this much money in your company. And it becomes a little incestuous and disconcerting for investors lately.
Yeah, I think you're right. Here's one piece of good news. The free cash flow in the hyperscalers, or the Mag 7, has actually started to hook up. So it was declining pretty rapidly in the AI arms race, and now we're starting to see free cash flow improve and move into positive territory for the collective group. That is good news, and that's very different from the 1990s when we had debt-fueled investments and counter investments and CapEx spend. And then just one last piece of clarification. In the 90s, we were 2 standard deviations away from the mean in terms of CapEx spending. We're just barely a blip above the mean in this environment. So I think you want it for us. We're concerned about names like Oracle that have an overdependence on openai. openai is moving rapidly and in a scattered fashion. We want companies that are better diversified. We own Oracle. We've owned it for a long time, so we can afford to stick with it. Historically, you've been able to hunker down, but I wouldn't be adding to it here now until we get more clarity. And then in the chip names, they're all going to benefit. AMD might benefit a little bit less than NVIDIA and Broadcom. We own all of them. I wouldn't really be keen on jumping in on Intel in here.
You mentioned how vulnerable the markets and investors might be because of these headlines out of the Middle East. What has the last 24 hours been for somebody like you who's got a lot of money, a lot of client money, and you have a lot of stocks? You also trimmed Walmart, I know that, and you added to Microsoft, you added Palantir, GE, Vernova, but it's a little difficult because these flash dips, as I like to call them, are very brief, especially the one yesterday for the Dow to have been down 880 points. And then suddenly pop in the last couple of minutes of the final hour into the green. That is hard to maneuver, especially for those of us who have daytime jobs and aren't sitting there watching our accounts.
Well, you don't get a lot of sleep in this environment. I've been up all night. Finally, last night I turned on Bonanza because I was just so sick of listening to the news. But I think this is a lot like DeepSeek, Liz. And that in that period, we were actually doing exactly what we are now, buying, adding to high quality names. So we bought Palantir at 88. We bought Tesla at 240. We bought NVIDIA at 108. And that's what you have to do in an environment where you're getting these very strong narratives that are being reinforced by the algos, and then the hedge funds jump in. And so you get supercharged volatility. That's an opportunity and friend to the long-term investor. It's just very hard to do. And you can buy some of these names and they'll go down further. We added to ServiceNow a couple weeks back. It went down further and then it popped back up. But you have to have confidence in the management team and the company's ability to pivot to the new technologies. And that was why we own Walmart. We still own it, one of our largest holdings in our ETF, TGLR, but we had to trim it back because it succeeded.
It's great to see you, Nancy, and I like how you've not gotten any sleep, but now you are, because there does come a point where you're not going to catch the bottom, probably not going to sell at the top, but if you can get around the top or the bottom in whatever you want to do, that certainly is a success. Thank you for joining us.
Well said. Thank you.